How do you handle and structure deals and look at deals when the rates are going up and those strategies may not cash flow or may not make sense anymore?
Well, first of all, it is to always have ample stores of liquidity. So in good times, I got a lot of flack from my partners from having more liquidity on our books. And again, you have to realize as a manager of funds, the more money we raise, all things being equal, the lower the returns we will have because it's a simple fraction. But the fact is, finance theory will tell you that the more cash you have, it's a drag on returns. Don't do it. You should always be max levered because on a spreadsheet, the spreadsheet just assumes things are linear and the
Mhm.
real world isn't linear. So we always have had ample stores of liquidity that have helped us to buffet some of the negative stuff that happens along the way. Number one. Number two, we are always cognizant of the fact that on our own balance sheets, apart from the company balance sheets, we keep ample stores of liquidity as well. So it's a buffer plus another buffer. Then we have intentionally, for instance, laddered our exposure. So both on rate caps, which are insurance vehicles, as well as loan expiries. So this year we have no loans expiring. That's a big help because if a
Yeah.
lot of loans
Mhm.
were expiring this year, we'd be in a heap of trouble. Now, part of this is intelligence, part of this is good luck. You can call it what it is. But we intentionally laddered the exposure that we did have. We already refinanced or sold those assets. So part of this is proactive financial planning. Part of this is taking steps right at the start, having ample liquidity, setting a buffer. And the last part of this is, I think there's even a book about this. Andy Gove, I think it was the Intel president or something back in the day. He has a great book called Only the Paranoid Survive. So there is a level of, you can call it paranoia, that you need to have because you could do all the right things for 10 years. And then in the 11th year, everything's wiped away. So you always need to be very diligent and vigilant because bad things can happen. So constant vigilance, constant diligence is the third criteria.